Bitcoin lost over 70% of its total value in 2022. The Federal Reserve in Washington made that happen without ever mentioning Bitcoin once. Every time Jerome Powell walked to the Federal Reserve podium in Washington, Bitcoin prices moved by thousands of dollars on exchange screens worldwide. Welcome to the secret treasury, where money, influence, and history intersect. Subscribe to trace the flow of power behind the headlines. Most people believe Bitcoin and the Federal Reserve exist in completely separate worlds. That belief is one of the most expensive misunderstandings in modern finance. The connection between these two systems runs deeper than most people imagine, and understanding it changes the way you read every single Bitcoin price movement. To trace how this connection formed, you must go back more than 100 years before Bitcoin was ever created or imagined by anyone. In November 1910, a group of the most powerful bankers in the United States boarded a private train at a station in Hoboken, New Jersey. They traveled under false names to Jekyll Island, a secluded coastal resort in Georgia. Nobody outside their group was told where they were heading. Inside a hunting lodge surrounded by tall Georgia pine trees, these men spent 9 days designing the plan that would transform all of American banking. Senator Nelson Aldrich organized the gathering. Attending were senior figures from the most powerful and influential banking firms operating in New York City. Paul Warburg, trained in European central banking at institutions in Germany, guided the group through the full technical design of their entire proposal. Their work became the Federal Reserve Act, signed into law by President Woodrow Wilson at the White House on December 23, 1913. The Federal Reserve launched with 12 regional banks spread across major American cities, all coordinated by a governing board based in Washington, D.C. At the center of this institution sat one powerful tool called the federal funds rate, the number that controls all American borrowing costs nationwide. When the Federal Reserve raises that rate, borrowing costs climb across the entire country, and money pulls back from the riskier edges of financial markets. When the rate falls, cheap money floods the financial system, and investors begin searching for higher returns in places they would not normally consider. For most of the 20th century, this single lever moved stock markets, bond prices, real estate values, and gold markets all across the United States. But a new kind of financial instrument was coming, one that would become the most sensitive barometer of Federal Reserve decisions the world had ever seen. In September 2008, the investment bank Lehman Brothers collapsed inside its New York City headquarters. It was the largest corporate bankruptcy in American history. Customers lined up outside bank branches across the United States to withdraw savings, while news cameras broadcast the fear and confusion live across the country. The Federal Reserve responded by cutting interest rates towards zero and launching an asset purchase program at a scale never before attempted in its entire history. The United States government approved a $700 billion rescue plan to prevent major financial institutions from failing and collapsing entirely across the country. Millions of Americans watched retirement savings shrink on paper, while the same institutions responsible for the crisis received billions in public assistance and bailout money. Inside this atmosphere of public anger and distrust, a personal group writing under the name Satoshi Nakamoto published a 9-page document in October 2008. That document described how two people could transfer value directly without any bank, government, or central authority standing in the transaction between them. On January 3, 2009, the first Bitcoin block was created on computers around the world. Buried inside that code was a headline from a London newspaper. The headline read, "Chancellor on brink of second bailout for banks." It was placed inside the code deliberately as a permanent record of protest. Bitcoin was built to operate without the Federal Reserve or any central banking institution. No government control, no single point of financial authority anywhere on Earth. Its total supply was permanently fixed at exactly 21 million coins. No government vote and no central bank decision could ever change that number under any circumstance. Transactions would be confirmed by a global computer network, not by any government office, bank building, or financial regulatory authority anywhere in the world. In its earliest years, Bitcoin lived on small technology forums and websites, its price measured in tiny fractions of a single United States dollar. The Federal Reserve in Washington paid no attention at all. Bitcoin was far too small to register on any serious financial radar anywhere in the world. But as years passed and more people joined the network, a quiet pattern began forming inside Bitcoin price charts on trading screens around the world. Each time the Federal Reserve shifted its interest rate policy, Bitcoin prices moved in a direction that matched the change in overall money conditions globally. After the 2008 crisis, the Federal Reserve held rates near zero for years to support the slow and difficult recovery of the American economy across every sector. During those years of cheap and freely available money, investors around the world searched for returns above what government bonds and savings accounts could offer. Some of that money moved into technology stocks listed in New York, some went into startups, and some began flowing steadily and consistently into Bitcoin. By 2013, Bitcoin had climbed from near zero to more than $1,000 per coin. Financial journalists published their first serious investigative reports on the network. The Federal Reserve acknowledged Bitcoin for the first time that year, but dismissed it as a speculative experiment rather than a genuine or serious financial instrument. By 2017, Bitcoin had risen to nearly $20,000 per coin. Television cameras appeared outside cryptocurrency exchange offices in New York and San Francisco. Around that same period, the Federal Reserve began raising interest rates for the first time since the 2008 crisis, as the American economy grew considerably stronger. As borrowing costs rose across the United States, investors moved money from risky assets back into bonds and savings accounts, now offering improving and reliable yields. Bitcoin fell sharply through 2018, sliding from nearly $20,000 down to approximately $3,200. Major news outlets across New York declared the Bitcoin era over. But the Federal Reserve was still repositioning inside Washington, and the next chapter of this remarkable story was already being written quietly behind closed doors. By late 2019, the Federal Reserve had lowered rates again in response to slowing global conditions. Bitcoin slowly and quietly climbed back toward $10,000. Then March 2020 arrived. Financial markets around the world collapsed as governments were forced to pause entire economies, almost completely and almost overnight. The Dow Jones Industrial Average in New York fell over 37% in just 33 days. Trading floors across the country went almost completely silent. The Federal Reserve responded at a speed and scale that had no precedent in its entire 107-year history as an American institution. Interest rates were cut to zero within days. A massive bond purchase program launched immediately from the Federal Reserve headquarters building in Washington, D.C. Over 18 months, the Federal Reserve added more than $4 trillion to its balance sheet by purchasing government bonds on the open American market. The United States Congress approved more than $5 trillion in economic relief programs to support businesses and households across the country through the long crisis. This enormous wave of money had to go somewhere. A significant portion flowed directly into stock markets, real estate, and digital asset markets around the world. Bitcoin had dropped to around $4,000 in March 2020 when global markets first collapsed. It would not stay anywhere near that level for long at all. By December 2020, Bitcoin reached $29,000. By April 2021, it crossed $64,000. The sheer pace of the rise stunned financial analysts around the world. In November 2021, Bitcoin touched its all-time high of $69,000 per coin on exchanges and trading platforms operating around the entire globe simultaneously. During every single month of that 300% climb, the Federal Reserve held interest rates at zero and continued expanding its enormous balance sheet in Washington. The Federal Open Market Committee, which meets 8 times per year inside its Washington, D.C. chambers, voted each time to keep money cheap and widely available. Jerome Powell, chair of the Federal Reserve, stood at his Washington podium and confirmed publicly that interest rate increases were not being considered at all. Bitcoin traders on exchanges from New York to Tokyo watched every Federal Reserve press conference as closely as they watched live Bitcoin price movement feeds. Hedge funds in New York, London, and Hong Kong began purchasing Bitcoin in volumes large enough to move global exchange prices by significant and measurable amounts. As major institutions entered Bitcoin markets, the digital currency became far more sensitive to macroeconomic forces that had long governed traditional financial assets worldwide. Research teams at major investment banks in New York formally connected Federal Reserve policy decisions to Bitcoin price performance across multiple years in published market reports. The more institutional money entered Bitcoin, the more it behaved like a high-risk asset, rising on cheap money and falling hard when money grew tight. This was not what Satoshi Nakamoto had intended when writing Bitcoin code during the 2008 banking crisis. The outcome was a profound and deeply ironic development. Bitcoin, built to stand completely outside every central bank on Earth, had become one of the most visible reflections of central bank policy decisions in the world. By mid-2021, warning signals appeared in American economic data. Prices in grocery stores and at gasoline stations across the country were rising rapidly each week. The Consumer Price Index in the United States rose by 7% in 2021, the highest annual inflation rate recorded in the country since the year 1982. Federal Reserve officials gathered at their Washington, D.C. headquarters and began seriously discussing the urgent need to reverse course on interest rate policy before conditions worsened. Jerome Powell stood before cameras in Washington, D.C. and admitted publicly that inflation was proving significantly harder to bring under control than the Federal Reserve had expected. In November 2021, the same month, Bitcoin peaked at $69,000. The Federal Reserve formally announced it would begin slowing its massive bond purchase program immediately. Bitcoin began falling almost immediately. Prices dropped week after week on exchanges in New York, London, Tokyo, and Singapore following that single policy announcement. In January 2022, the Federal Reserve released detailed minutes from its December meeting. The language inside those documents was sharper than financial markets had anticipated. Officials in Washington signaled they were ready to raise interest rates multiple times through 2022 and reduce the enormous balance sheet built during the crisis years. Bitcoin dropped more than 15% within 48 hours of those Federal Reserve documents being made available to the public through official Washington channels. On screens in New York, London, Singapore, and Tokyo, the link between Federal Reserve language and Bitcoin price direction had become completely impossible to deny. In March 2022, the Federal Reserve raised its key interest rate for the first time in 4 years. The decision was announced from the building in Washington, D.C. By June 2022, the Federal Reserve raised rates by 0.75% in a single meeting. That was the largest single rate move since 1994. Bitcoin opened 2022 near $47,000 on global exchanges. By summer, it had fallen below $20,000 and was still declining consistently week after week. By November 2022, Bitcoin sat near $15,500, having lost more than 77% of its value from the all-time high set just 1 year earlier. This collapse unfolded in direct parallel with the fastest Federal Reserve rate increase cycle recorded in more than 40 years of American economic and financial history. Investors who had tracked Federal Reserve meeting documents carefully had seen warning signals months before the broader global market accepted the scale of the danger coming. Academic researchers at universities in New York and London published papers showing a statistically measurable link between Federal Reserve rate decisions and Bitcoin price returns. One finding appeared consistently across the research data. Bitcoin prices declined in the days surrounding every Federal Reserve rate increase throughout the full 2022 policy cycle. Other forces also moved Bitcoin during this period, including exchange failures and regulatory pressure. But the Federal Reserve signal appeared consistently across every major decline. By 2023, Federal Reserve meeting dates in Washington, D.C. were appearing on official cryptocurrency trading calendars published and distributed by major global exchanges worldwide. Analysts published detailed preview reports before each scheduled Federal Reserve meeting, modeling how Bitcoin prices might respond to each possible interest rate decision outcome. Bitcoin had traveled an extraordinary distance from its origins as a protest against central banking to becoming one of the most precise indicators of central bank behavior. By late 2023, as rate increases in Washington slowed, Bitcoin climbed back above $40,000 on global exchanges after nearly 2 full years of consistent decline. The relationship between the Federal Reserve and Bitcoin had become one of the most closely studied financial connections in all of global markets entering the year 2024. The most dramatic moments in this story had not yet arrived. What happened next in Washington, D.C. would send Bitcoin to heights the world had never seen before. By January 2024, Bitcoin had climbed back above $40,000 on global exchanges after nearly 2 full years of decline driven by rising rates in Washington. Financial analysts in New York watched climbing price charts and began publishing new research notes about what was driving the steady and surprising recovery. The answer pointed directly to the Federal Reserve Building in Washington, D.C., where the pace of interest rate increases had finally and visibly slowed. Jerome Powell appeared before cameras at Federal Reserve headquarters and confirmed the central bank was watching all incoming economic data very carefully. Markets interpreted every single word spoken at that Washington podium as a forward signal about the future direction of interest rates across the entire economy. Bitcoin traders on exchanges in New York, London, Singapore, and Seoul studied Federal Reserve press conference transcripts line by line after every scheduled meeting. Something else was developing inside Washington regulatory offices that would reshape Bitcoin markets in a way nobody had fully anticipated or predicted in advance. Asset management firms in New York had been filing applications with United States regulators for years, seeking permission to launch regulated Bitcoin investment funds. The Securities and Exchange Commission in Washington had rejected every single application submitted since the very first one arrived on their desks back in 2013. BlackRock, the largest asset management firm on earth with headquarters in New York City, filed its own formal application with regulators in June 2023. That filing sent a clear signal through global financial markets that institutional demand for regulated Bitcoin products was growing at an accelerating and serious pace. On January 10, 2024, regulators at the Securities and Exchange Commission in Washington approved the first Bitcoin exchange traded funds in United States financial history. The next morning, trading floors in New York City opened with Bitcoin exchange traded funds listed on major American stock exchanges for the very first time ever. Pension funds, university endowments, and retirement accounts across the United States could now access Bitcoin exposure through familiar and fully regulated investment structures. The connection between Bitcoin and traditional financial systems, already strong, had been formalized at the highest regulatory level ever reached in American finance. Billions of dollars flowed into these new Bitcoin funds during the first weeks of trading as institutional demand exceeded even the most optimistic early market projections. Bitcoin crossed $50,000 on global exchanges within weeks of those exchange-traded fund approvals being announced from the Washington regulatory offices downtown. But the Federal Reserve in Washington had not yet made its next major policy move, and traders watched every economic data release from government agencies with sharp attention. Inflation data arriving at Federal Reserve offices in Washington showed prices were slowly moving back toward the central bank target range that policymakers had set. Jerome Powell appeared before cameras at Federal Reserve headquarters and confirmed the central bank was approaching a genuine turning point in its rate policy direction. The anticipation building inside financial markets in New York and around the world reached levels not seen since the earliest months of the rate increase cycle. Then on April 20th, 2024, something occurred inside Bitcoin network code that happens only once every 4 years without exception and without any human decision required. The Bitcoin halving reduced the number of new coins entering circulation from the global computer network by exactly 50% automatically and permanently as designed. Miners operating large computing facilities in Texas, Kazakhstan, and Iceland watched their daily Bitcoin earnings cut precisely in half by lines of original network code. Previous halvings in 2012, 2016, and 2020 had each been followed by significant Bitcoin price increases across the months and years that followed those events. Historical data from exchanges showed the pattern clearly on price charts, though analysts consistently noted that past performance does not guarantee any future outcome. Bitcoin climbed towards $70,000 in the weeks following the halving as institutional buying through the new exchange-traded funds continued at elevated volumes. Simultaneously, Federal Reserve officials in Washington continued debating the precise timing of the first interest rate reduction in more than 4 years of tight policy. Economic data arriving at government agencies in Washington showed the American labor market remained strong, even as inflation gradually and consistently moved back toward target. Each Federal Reserve meeting in Washington produced policy statements that financial analysts in New York dissected for any hint about the timing of expected rate cuts. Bitcoin prices moved on exchanges around the world in the hours following every Federal Reserve press conference as traders repositioned holdings on global platforms. On September 18, 2024, the Federal Open Market Committee voted at its Washington, D.C. headquarters to reduce interest rates by 0.5 percentage point in one decision. It was the first Federal Reserve rate cut in more than 4 years, announced by Jerome Powell at the familiar podium inside Federal Reserve headquarters in Washington. Trading floors in New York celebrated the announcement. Stock indices climbed on screens. Bitcoin rose sharply on exchanges around the world throughout that historic afternoon. The rate cut cycle had officially begun in Washington, easing money conditions in the United States for the first time since the long and difficult pandemic recovery years. Bitcoin climbed steadily through October and November 2024 as additional Federal Reserve rate reductions followed the September announcement from the Washington boardrooms. Then in November 2024, a presidential election result in the United States shifted the political landscape around Bitcoin and digital assets in one decisive overnight movement. The incoming administration had spoken publicly and consistently about creating a more welcoming regulatory environment for Bitcoin and digital asset markets across the country. Bitcoin crossed $80,000 in the days following the November 2024 election result as traders on global exchanges responded rapidly to the dramatic political shift. By December 2024, Bitcoin had broken through $100,000 per coin for the very first time in its entire 15-year history across exchanges operating worldwide. Photographs of Bitcoin price screens displaying six-figure numbers circulated through newsrooms in New York, London, Tokyo, and Sydney almost simultaneously on that day. People who had purchased Bitcoin during the darkest months of 2022, when prices sat below $16,000, had watched their holdings climb by more than 500%. The Federal Reserve had cut interest rates 3 times through late 2024, each decision read aloud by Jerome Powell at the podium in Washington, D.C. headquarters. Each rate cut had added momentum to a Bitcoin rally, already driven by institutional purchasing through exchange-traded funds listed on stock exchanges in New York City. By early 2025, exchange-traded Bitcoin funds held over $100 billion in total assets, tracked in real time by financial terminals on trading floors around the world. The largest financial institutions in New York had become significant participants in a market once dismissed by serious analysts as a temporary fringe technology experiment. Federal Reserve meeting dates were now officially printed on Bitcoin trading calendars distributed by major cryptocurrency exchanges to their professional clients around the globe. The pattern that researchers had documented across years of financial data was now visible to anyone watching a Bitcoin price chart alongside a Federal Reserve meeting calendar. When the Federal Reserve signaled cheaper money from Washington, Bitcoin rose on exchanges in New York, London, Singapore, and Seoul with remarkable consistency across all data. When the Federal Reserve tightened money conditions from Washington, Bitcoin fell on those same exchanges with a consistency that financial data analysts found impossible to ignore. Academic researchers at universities in New York, London, and Zurich published peer-reviewed studies confirming this measurable connection in internationally recognized financial journals. The link between Federal Reserve rate decisions and Bitcoin price direction had become one of the most thoroughly documented relationships in all of modern financial research. But history shows no financial relationship remains perfectly stable, and new forces were gathering in Washington and internationally through 2025 to test this powerful connection. By mid-2025, the Federal Reserve in Washington faced a new set of economic pressures complicating the rate reduction path it had mapped out during previous policy meetings. Inflation data arriving at government economic agencies showed consumer prices were proving more stubborn than Federal Reserve forecasting models had projected in earlier meetings. Jerome Powell stood before cameras in Washington and described the economic environment as unusually complex, with important signals arriving simultaneously from multiple directions. Global trade patterns were shifting as new tariff policies announced from Washington government buildings added fresh upward pressure on consumer prices inside stores across the country. Federal Reserve officials inside the Washington headquarters debated how to respond to an economy showing simultaneous signs of slowing growth and persistent price pressures. This economic combination, where growth slows while prices remain elevated together, is among the most difficult conditions any major central bank faces in practice. Bitcoin prices reflected the growing uncertainty, swinging sharply on exchanges in New York and London around every Federal Reserve meeting throughout the full year of 2025. Traders who once predicted Bitcoin direction confidently from Federal Reserve signals found the relationship more difficult to read clearly inside this new and complex environment. The Federal Reserve paused its rate cut cycle in early 2025, holding rates steady at Washington, D.C. headquarters, while officials awaited clearer and more consistent economic data. Bitcoin responded by trading between $80,000 and $100,000 on global exchanges as markets waited for Washington to provide clearer direction on the path ahead. Behind the scenes at the Federal Reserve in Washington, a larger question was forming about the role digital assets should play inside the regulated American financial system. Federal Reserve staff published internal research examining whether Bitcoin had grown large enough and connected enough to matter for broader financial stability considerations. A government working group meeting inside Washington was studying how digital asset market movements might affect the stability of traditional banking and financial institutions. Regulators at multiple agencies in Washington were coordinating their digital asset oversight approach in ways that had no clear historical precedent in American regulatory history. This level of coordinated regulatory attention from Washington signaled how far Bitcoin had traveled from its origins as a small anonymous computer network built in protest. The 21 million coin limit coded into Bitcoin at its creation in 2009 remained completely unchanged, a feature no government office could alter by any legal mechanism. But the price of each coin was now deeply connected to decisions made inside a Washington building that Bitcoin was originally designed to permanently and completely circumvent. In 2026, as Federal Reserve officials gathered inside their Washington, D.C. headquarters for another scheduled meeting, global markets positioned and watched with extraordinary attention. Bitcoin traders adjusted holdings on exchanges worldwide before each Federal Reserve announcement, using probability models built from years of carefully documented price and policy data. The Federal Reserve released its policy statement from Washington. Within minutes, Bitcoin prices moved sharply on exchanges operating across multiple continents simultaneously. That single moment captured everything built across 16 years of closely intertwined history between Bitcoin and the Federal Reserve operating from its Washington headquarters. Satoshi Nakamoto had embedded a newspaper headline inside Bitcoin code in January 2009 as a permanent statement about the failure and unreliability of central banking systems. That same technology had grown into an asset so entangled with central banking that its price now moved in response to sentences spoken at a Washington podium. The lesson history offers here is not that Bitcoin failed in its original purpose. The lesson is about how financial systems connect across every boundary ever drawn between them. When money flows freely through an economy, it finds the highest available returns, and Bitcoin became one of those destinations for capital searching for returns above inflation. When money tightens, it retreats from the riskiest edges of financial markets, and Bitcoin has demonstrated repeatedly and measurably that it sits at those outer edges. The men who gathered at Jekyll Island in Georgia in 1910 to design the Federal Reserve could not have imagined what would eventually follow from their work. They built a system to stabilize American banking and control the supply of money flowing through the United States economy across every region and every sector of commerce. More than a century later, the institution controls dollar borrowing costs, and those costs now shape the price of a digital currency running on global computer networks. Bitcoin was built outside the financial system, but the financial system grew large and connected enough to reach all the way into the world Bitcoin had created and occupied. every Federal Reserve meeting in Washington, D.C., is now, in a very real and thoroughly documented sense, a Bitcoin event as much as any traditional financial market event. The voting members of the Federal Open Market Committee seated inside their Washington chamber do not discuss Bitcoin when they vote on interest rate policy decisions together. And yet the votes they cast move Bitcoin prices on exchange screens in New York, London, Tokyo, and Seoul more reliably than almost any other single measurable force. That is the extraordinary and largely untold story of how the Federal Reserve and Bitcoin became permanently and measurably connected across modern global financial history. The man at the Washington podium does not hold Bitcoin, but every word he speaks there is heard in real time on exchange screens running across the entire world. If this story moved you, hit subscribe button. The past holds powerful lessons, and I will help you uncover them.